Hi, welcome to the RunSignup Sales Tax webinar. This is Bob Bickle, and joining me is Kevin Harris. We will begin in 1 minute. Somebody posts on the question area or on the chat area that you can hear us. We've got some hi Bobs in there. Hi Brad. Last week when we did a webinar, GoToWebinar actually went down. Hopefully that does not happen again today. All right. All right, I've got 2 o'clock and we'll go ahead and start this thing. So I'm gonna start kind of how all legal and tax presentations should start. RunSignup does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only and is not intended to provide and should not be relied on for tax, legal, or accounting advice. RunSignup makes no representations, warranties, or assurances as to the accuracy, currency, or completeness of the information provided in this presentation. But I will tell you that we've tried really hard to be accurate and good, and we've spent a lot of time and money on this. So I wanted to cover just 3 bullet points before I turn it over to Kevin here. The first bullet point is please don't shoot the messenger here. The reality is that states are looking for revenue, and the e-commerce marketplace is just too big for them to ignore anymore. And they are coming after e-commerce vendors and those who sell through e-commerce vendors. And this kind of came from the top with the Amazons and Wayfarers, as Kevin will discuss, but it really impacts everybody completely, from the smallest race to Amazon. And we are not alone in pursuing this. Eventbrite has already started rolling this out in a few states. They still have to roll it out in a bunch more. Race Roster posted a blog yesterday saying that they have begun work on an implementation for sales tax. And we've been in communication with a bunch of other vendors as well. Which leads me to my second point. Look, we're all in this together, and one of the ways that we've done that is we've tried to write some blogs up. You'll see a lot more coming from us over the next month. We're doing this webinar. We also are trying to share and collaborate with all of the people who you may think of as our competitors. The reality is that we're all kind of in this together, and it's a challenging topic. And the more people that we have banded together, I think the better it is for all of us. So that's why we've been sharing status updates with every race registration and sending out regular emails to all the CEOs and CFOs of those companies. And given the fact that we've entered into the nonprofit market more aggressively with our GiveSignup brand, I've also reached out to those types of vendors as well, like Blackbot and Classy and CrowdRise and so forth. But you all are an important part of this. So we did some sales tax presentations at Symposium in July, and we got some excellent feedback. And Kevin will cover that at the end of the presentation. But feedback shouldn't be, oh, I don't think I should pay sales tax. Feedback is, give us a statute from your state or a ruling from your state that's been ruled on in court, and then we can accurately take action on that, because that's material information. Final point I'll make is that, you know, I'm not quite sure what impact this is going to have on our business or your business. It's going to be interesting to see. The fact is that we all have to comply with the law. I know that a number of races are going to be very concerned that this is going to increase the net price of their race by 6% or whatever. And they're concerned about that. And I would expect that some races may try to look for an alternate vendor that doesn't force the collection of taxes. I will say that might not be a wise move, but if you feel like you need to move someplace else, we don't have an exclusive contract, so you can. I think we're actually going to gain a lot of customers. The feedback that we heard from our symposium attendees, a lot of these nonprofits, a lot of the customers out there, they're part of larger organizations, or they have to report to a board, and like they just have fiduciary responsibilities or liability. They don't want to have tax liabilities hanging over their heads. And I think every one of us needs to have a plan in place to address this. There's way too much risk in having back taxes. A couple of our customers have gotten audited by their states, and they have had to pay back taxes, and it is a painful process to go through. The bright side of all this is that it's painful, but RunSignup is going to try to make this as painless as possible. We're building a lot of technology. We've invested a lot of money in 3 different tax advisors to try to come up with the right answers, and we're going to be going through that today. So that, in fact, is a perfect handoff time for Kevin, who actually knows what the hell he's doing.
Thanks, Bob. Okay, so let me jump into some of this content. What's really precipitated all this change? Well, it really comes about because of a Supreme Court ruling from a little bit over a year ago. South Dakota sued Wayfair. South Dakota didn't feel like they were getting their appropriate sales tax on items that Wayfair was selling into the state of South Dakota. And South Dakota won. And what that did is it cleared the way for states to charge sales tax on interstate purchases. It also put teeth into the concept of economic nexus, and we'll talk in a few minutes about what economic nexus is. One important thing to think about is that South Dakota versus Wayfair did not make anything new taxable or anything new not taxable. That wasn't what it was about. It was about looking at each individual state's sales tax law, figuring out what was taxable, and then the states being able to compel out-of-state sellers to be able to collect that tax on their behalf. This South Dakota versus Wayfair kicked off and as I mentioned, put teeth into the concept of economic nexus. But what it also did is it empowered states to put in place what are called marketplace facilitator laws. And think Amazon, think eBay, think RunSignup. These new laws compel platforms that facilitate sales on behalf of other sellers. It compels the platform to collect and remit sales tax on behalf of those sellers. Today, there are 35 states that have marketplace facilitator laws. There are 45 states, plus the District of Columbia, that have sales taxes in total. Not all 35 state marketplace facilitator laws are effective yet. Some of them become effective on January 1st. But most of them are effective or will become effective October 1st or on January 1st. The folks that we're working with, one is a sales tax automation provider, one is a relatively large law firm in their sales tax practice, and one is a smaller CPA law firm. All of them are predicting that all 45 states will have a marketplace facilitator law within another year. So this concept has become very popular with states. They're putting teeth into their economic nexus laws, and they're also enabling these marketplace facilitator laws, which require the platforms to collect on behalf of their sellers. RunSignup and other platforms that facilitate the sale of registrations and tickets will need to comply. The laws are very broadly written. If you look at any state, they look like they intend to capture as many platforms or sellers as possible. There's not, other than economic nexus, which we'll talk about in a minute, there's not really a concept that says that a platform, even a smaller platform, doesn't have to comply if they have economic nexus that would otherwise make them have to comply. So this is a way of saying that we don't think there are going to be other registration platforms that don't have to do this. We think that they all do, and to Bob's earlier comments, we've seen some notifications from Eventbrite and RaceRoster that there's an intention for those folks to comply as well.
Just so you know, we will be publishing this webinar online afterwards, and we will be publishing these slides afterwards as well. The 5 outlying states are states that don't charge sales tax, like Delaware.
Okay, so what is nexus? Talked about this a minute ago. Nexus is a concept that describes the connection between a state and a business. And it used to be that physical nexus really was the only way that a state could compel you to collect sales tax. So physical nexus is maintaining an office or a facility in a state or having an employee in a state. And you're required to have nexus in order for the state to be able to compel you to collect sales tax. What South Dakota versus Wayfair said is that states could compel out-of-state sellers to collect sales tax for goods that are being shipped into their state. And what it also said is that as long as there was a fair minimum amount of sales or transaction into a state, that could compel you to collect that tax. South Dakota's rule is 200 transactions or $100,000 in sales. So if you have 200 transactions in the state of South Dakota or $100,000 worth of sales, you can be compelled to collect and remit sales tax on those interstate sales. So 200 transactions is not a lot. For RunSignup, we have nexus in every state based upon the amount of registrations that we do in each state. So that's part of this idea of marketplace facilitation, and nexus and economic nexus is the number of transactions that you do in each state. And couple that with these marketplace facilitator laws that we talked about, which are now overriding in particular physical nexus, but now also economic nexus as well, to compel marketplaces to collect on behalf of sellers within states that have marketplace facilitator laws. So what are we doing about sales tax? And Bob talked a little bit about this in his preamble, but we've commissioned actually a couple of sales tax studies. One of those studies, as I mentioned before, was done with a smaller specialty sales tax firm, both a CPA and a law firm. One of those was done with a larger New York-based law firm with a couple of partners there who specialize in sales tax. And then we're also working with a... Also read as expensive. And then also we have been working with a sales tax automation provider who also keeps rules on common items that we sell and are sold online and really even in physical stores about what their sales tax is. And we're trying to triangulate the information from all those providers to come up with one matrix of where we think common items that are sold on our platform are taxable. And we're going to share that matrix in a few minutes in our presentation. We also use that to determine in what states we will collect and remit on behalf of races, which are the marketplace states, and in which states races can make their own decisions on where to collect and remit. So RunSignup will collect and remit in marketplace states, and in states that are not marketplace states and which items that are commonly sold on our platform are taxable, will allow races to decide whether or not to turn on or turn off sales tax for collection in those states. So let's just hold and make sure people understand that, because that's a really important point. So you're saying in 35 states, by January 1st, it will be compelled to actually
calculate the sales tax for those 35 states, charge that sales tax to whoever is buying whatever that is, that's taxable, and we'll be collecting that ourselves and paying that to the state. And when we make that payment to the state, we be reporting detailed items or just a summary amount?
So all that was correct, and yes, it'll be one large tax return that comes from RunSignup. It won't be race specific, it won't be item specific, it'll be taxable sales and exempt sales that occurred in that state. In addition to what Bob said, the sales tax automation provider that we're working with is working with us on a process that's called SST, or Streamlined Sales Tax. So there is a bunch of states where this sales tax automation provider will facilitate those returns, and will make that process more seamless on our end. But yes, it'll be one big return that gets filed on behalf of all races, with all taxable and all exempt sales stated on that one tax return.
Great. And so if you're a race and you get audited in one of those states, you will have a report in RunSignup that says, oh, I've paid sales tax via RunSignup, go talk to RunSignup. Is that a fair statement?
That's correct, yeah. So we'll have reports in RunSignup that'll indicate that same thing, those taxable and exempt sales, what sales tax was collected off of those sales, and then what we've remitted on your behalf in those states and off of those sales. So that's how it all will work. And if you were to be audited by a state, the first thing you do is go to your RunSignup dashboard and go through that set of reports with them. And if it was necessary to get RunSignup involved, we certainly would get involved to help with that explanation of how those reports worked and where those remittances were made on your behalf.
Okay, so there's 10 non-marketplace states, and if I'm in one of those states, what is RunSignup going to do for me?
So RunSignup, first off, is going to give you the option to decide, do I want to turn on sales tax for my race, or do I want to say that I have an exemption from sales tax for my race? And we'll talk about that a little bit more in detail when we get into the taxability matrix. But if you indicate that you want to collect sales tax, RunSignup will be keeping track of what items you sell, into what states you sell them, and as one of your participants goes through the process of registering for your race, we'll deliver back what the appropriate sales tax is that should be collected on that transaction. We'll complete that transaction, and then when we remit the registration proceeds to you, we will also remit your sales tax to you so that you can go ahead and file your sales tax return on your own behalf. We'll also have the same set of reports in RunSignup that will show what taxable and what exempt sales that you made and what sales tax was collected on your behalf. So you'll have the information necessary to be able to fill out your own sales tax returns.
So if I'm a race that's already collecting sales tax, I'm in a marketplace state, basically RunSignup's going to start taking care of that for me. If I'm a race that's already collecting sales tax, and RunSignup, but it's a non-marketplace state, so I'm paying the sales tax every month. RunSignup will have new calculations that I can use that will likely be much more accurate and timely, and produce much nicer reports than before.
Correct on both, Bob.
Kevin, I'm trying to find a pony in all this. Okay, so
if you're collecting sales tax today and you're in a marketplace state, RunSignup will take over that responsibility for you, probably somewhere around October 1st. That's the date that we've kind of pegged to be able to start doing this in marketplace states. If you're collecting sales tax on your own today and you're not in a marketplace state, you'll continue to do that, but we're going to have better reporting for you. We're going to have a connection to a sales tax automation provider who on demand can give us updated rates. You won't have to build the sales tax tables in RunSignup that you have to do today, and you won't have as much worries about local and county and all the different variations of tax that can occur within the state where you might be reporting today. So there may be a little silver lining.
So this is the pony. Okay, so we're getting a lot of questions about exemptions. So let's move on to the next slide where we start to talk more about what's taxable. And so
okay, so what kind of things are taxable? And the slide right after this is a big one on exemptions. So bear with me for a minute, and then I'll get to that one. So race registrations are taxable. Not in every state. We're going to go over that matrix in a minute. Merchandise is also taxable in some states, memberships in some states, tickets for nonprofits in some states, and processing fees in some states. Each state has their own rules on taxability on each of these items, and many of these states have got some quirky things about them as well. In some states, if you offer a spectator admission, it can keep your other admission from being taxable. In some states, you're taxed or not taxed if you hold your race in a facility, but you are taxed if it's not in a facility. So that's what we've been trying to track down over the past several months to build this matrix. And that's what we've been trying to build logic in that will allow us to be able to look at those things, determine when those things are occurring, and figure out the right taxability or exemption based upon them. And then each state has their own rules about exemptions for nonprofits. And as I mentioned, I'll talk more about that in a minute. And then, we talked about these complex exemptions for race registrations. Some of the exemptions for nonprofits have to do with the amount of time that you offer registrations for sale, or the number of events that you do in a year, or how much money you raise. So there's a whole complex network of how those exemptions work. And what we're hoping to do is to make that understandable to you in each state, so you can determine, do I fall into that exemption or not, and then can claim that on RunSignup. So if it's available to you and you're a nonprofit, you won't have to be responsible for tax on those items.
now, are we about to head to the matrix?
One more slide.
One more slide, okay.
So this is a little bit of a common misconception on nonprofits. So I wanted to handle this one directly. So nonprofits are typically exempt from federal and state income taxes. In some states, nonprofits are exempt from paying sales tax. So these are transactions where you're buying something, where the nonprofit is the buyer. When nonprofits are listing races or merchandise for sale on our site, they are not the buyer of race registrations. They are the seller of race registrations. So when a race is being hosted on RunSignup, your nonprofit exemption doesn't have anything to do with whether or not you pay sales tax. It has to do with whether or not your state exempts you from when you sell items from collecting sales tax. So being exempt from paying sales tax does not automatically make you exempt from collecting sales tax on sales. And that's been one of the painstaking things that we've been wading through state by state to figure out which states exempt paying sales tax and which states exempt collecting sales tax. There are a limited number of states that do exempt nonprofits, and we're going to make those exemptions understandable and available to you where they exist. Okay, so now we're getting ready to head into the matrix, Bob.
I hope everybody has a huge monitor.
Okay, so
this is just half the states.
This is half the states. It was too big to put on one slide for all the states. So we'll cover this one first, and then we'll hit the other half of the states. I want to do a couple of examples as we go through this to better understand how this works. And also, as you're going through this, look for your state, and then, we'll talk a little bit about where you can look for this idea of whether nonprofits might have an exemption available to them. So starting on the left and working from left to right. On the left is the first column is the state. So that's kind of obvious, and each of the 50 states are here, plus the District of Columbia. The next column is tax on race charge. So this is your registration fee or your admission, as it's typically found in the state tax codes and with our state tax automation provider. And this indicates in each state whether or not our group of experts believe a race registration or admission is taxable. So think about this first from the concept of being a for-profit company. That's really the way to think about these first three columns is what's the treatment if I am a for-profit company? Because when we get to the column on nonprofits, there's going to be some states where there's exemptions available for some of this. The next column over is tax on merchandise. So this again is a compilation of our experts where they believe merchandise is taxable. So this is you set up a store on RunSignup, you sell shirts or cups or hats or whatever. This is typically going to be the treatment for whether or not that merchandise is taxable in that state. Memberships. Memberships covers a couple of different things. It covers if you are a triathlon and there is a USAT membership that is part of the sign up for your event. This is whether or not that USAT membership is taxable or not in that state. And this also has to do with running clubs and whether or not memberships to those types of clubs are taxable in that state as well. The next column on here is nonprofit sales of taxable items. So think about this column as overriding, if there's an exemption, what you just learned in the first three columns. So we'll stop here and we'll use Arizona as an example because Arizona taxes just about everything. So you're a for-profit company and you're offering a race in Arizona. The registration is taxable. Any merchandise that you sell is taxable. If there were a membership that went along with that, it's also taxable. And I'm going to skip over to the last column on the right because it's the processing fee. The processing fee is also taxable in the state of Arizona as well. Now, what about if I'm a nonprofit? Well, the column here, nonprofit sales of taxable items, says that if you are a nonprofit in the state of Arizona, those first three columns now become exempt for you because nonprofits are exempt from the proceeds of sales in the state of Arizona. So that's what that next column is about, is it's telling you whether or not there is a nonprofit exemption available in that state. And we used a bunch of different coding here because the exemptions are really complicated. When it says exempt, that's pretty clear. It's just everything that would have been taxable if you are a for-profit company is now exempt because you're a nonprofit. We indicated with taxable plus that there's a limited exemption that's available with some criteria attached to it. And we indicated with taxable and an asterisk that there was an exemption available on what's called a day count. So a lot of states have this concept of a day count for nonprofits. And what a day count is either your event only lasts a certain number of days, or the time that you sell at that event only lasts a certain number of days, or maybe your registration period is only a certain number of days. And then there's other exemptions that fall into this plus category that are things like the state of Georgia, where the state of Georgia, their exemption for nonprofits is only available to religious organizations. So if you look down to Georgia, it says taxable plus, and that is meant to indicate that for most nonprofits, it's actually going to be taxable unless you are a religious organization.
So let's stop here for a minute. So I'm a nonprofit in Georgia, and I come in and I want to get an exemption at RunSignup. The software will basically ask you if you qualify for that exemption. And we'll be able to do some automation of that because we'll be able to determine from your payment account that you are a 501c3, and we can validate that. In the state of Georgia, if you're trying to cure cancer, then you're still taxable. But if you're a religious organization, you would fill out a form or a set of fields on RunSignup that say, I'm exempt because we're the First Presbyterian Church and we're exempt. Is that correct?
That's all correct. Yeah, and that's one of the things that we're going to do and one of the challenges that we're going to face is that we're going to take the rule in each state that has an exemption. We're going to recognize where you've set up your race. We're going to put the rule up when you go through that part of the wizard that addresses sales tax. You'll be able to read the rule and say, I comply with that rule or I don't comply with that rule. And if you comply with that rule, you're going to allow yourself to check off and say that I'm exempt. We're going to do a little bit of diligence on our end. If you say you're a nonprofit, we're going to check your payment account to make sure that you actually are a nonprofit. In Bob's example for Georgia, we may also look at the name of your organization, see if you look like a religious organization. So we'll do a little bit of diligence on our end because we're required to make sure that you're taking that exemption appropriately. And then when you go ahead and set up in that state, then the sales of those items that otherwise would have been taxable become exempt. And we still make the same calls and keep the same reports, but those become exempt sales and not taxable sales. Okay, so I'm going to keep going across the matrix and then stop and talk a little bit also about this kind of complication that can happen based upon a mix of items that you might sell. So we talked about the nonprofit sales of taxable items column. There's a specific column here on tickets. So we've begun to offer, as part of our GiveSignup offering, the ability to offer tickets to nonprofits. And this is a specific column relative to if I'm selling a ticket and I am a nonprofit on GiveSignup, whether or not that is taxable or exempt. And we use the same markers on that, the plus and the asterisk, to indicate that there's some of these other qualifications there. We'll do the same thing when someone sets them, excuse me, up on GiveSignup, is write the rule for you. You can decide whether or not you comply with the rule and either take the exemption or not take the exemption based upon the rules that we'll publish for you. And then the next column here is RunSignup to collect on your behalf. Looks like I spelled RunSignup wrong. I'm missing an N. But the information there is otherwise still accurate.
Nice job.
In states that indicate marketplace, those are the states that we will collect and remit on your behalf. Some of those states' rules won't go into place until January of 2020, but most of the states that say marketplace either already have a requirement or will have a requirement between now and October 1st. For us to begin collecting and remitting on your behalf. The other states that say no and have a sales tax, like the state of Florida, those are states where we will provide you information on sales tax in those states. We'll provide you information about exemptions in those states, and you can decide whether or not you want to turn on or not turn on sales tax in those states. If you turn it on, we'll collect it on your behalf and we'll remit it to you along with your registration proceeds. And if you don't, then obviously we won't do that on your behalf. And then the last column on here is processing fees. So that is the RunSignup fee that is part of the registration, and that's the list of where our advisors believe processing fees are taxable. There's a couple of areas here, and I'll go to the next chart so I can leave that one up for a minute so you can look at your states on this chart to talk about some more concepts here. So the first thing I'm going to talk about is that we think that this is getting to be pretty accurate at this point. We've had a number of folks weigh in on it. We exposed this at our symposium and got to hear about some quirky exceptions that some states have, and we've been able to run down some of those and make updates related to that. But there's a couple of areas that we're still working on. Processing fee is one of them. Processing fee is actually named in some state codes as many as 3 different times. And one of our advisors believes that it's taxed the way that it's shown in this column, and another one of our advisors believes that it's taxed differently. And so we're still trying to resolve what is the right treatment for that. We're going with the treatment that generates the least tax, but we want to make sure that's correct before we actually implement it. The other little bit of an exception to talk about here is the state of Texas. We've heard from a number of race directors in the state of Texas that they don't believe that registrations are taxable in the state. And they've provided good information on that. We've digested that information. It is still a little bit gray. And our next step with that is we've asked one of our advisors to go directly to the state of Texas and ask them to tell them our use case, to tell them that we don't believe it's taxable, and to get their ruling back as to whether or not it is taxable. So it's shown as yes here today because the sales tax automation provider we use believes it's taxable, but we are working to see if we can get a better ruling from that, in which case the sales tax automation provider works the same way we do. If we can give them good, solid information that comes from a ruling or comes from a set of statutes, they will update the way that they tax things as well. So the other thing I wanted to stop and talk about here is what state do you actually tax each of these items in? And I'll go across the columns as I talk about that as well. So we believe that race registrations are taxed in the state where the race is held. So typically the way sales tax works is if you think about where is the product or service delivered, that's where it should be taxed. So it's kind of easy when you think about a column like merchandise, which is where'd you ship the shirt to? That becomes the state where it's taxable. On a race registration, the state that we believe it's taxable in is where you deliver the race. So if your participant comes from out of state to come to your race, then the tax on that race is going to be based upon where the race is held. Memberships are a little bit different. There's a couple different kinds of memberships that we sell. We sell one-day memberships for USAT for someone who has a triathlon, and we sell 12-month memberships to USAT and other clubs, which are just basically a membership to that club. Our advisors believe that if it is a one-day membership, it's taxed in the state where that race that goes with that one-day membership is being held. If it is a 12-month membership, that benefit to that member accrues all year, basically at their home. And so it's taxed in their home state. Skipping over to tickets. Tickets are just like race charges or admissions. They're taxed in the state where the event is delivered. And then processing fees. Processing fees are taxed in the state of the cardholder. So the idea is that the ability to do the charge is the service that's being delivered, and that service is being delivered where the cardholder is being billed, or the address of the cardholder. And so you get this potentially very complex tax treatment on a single, which could be on a single transaction. So going back to Arizona for a second, where we know everything is taxable. So you could hold a race in Arizona. You could have someone who comes from Nevada for that race, and you ship them their shirt in Nevada. They could have a 12-month membership on that, and
they might actually live in California or something.
Yeah, they may want to ship their shirt to Nevada, but they actually live in, and their credit card is billed in California. So you could have multiple tax treatments on the same on the same registration. Yeah, because I think Nevada is actually exempt, but
yeah, whatever. But you get the idea.
And that's one of the reasons why this is complex, and this takes time in order to implement, because we have to track that. And when that registration happens, we have to look to each part of that registration to determine where it's taxable. We have to call the automation provider to get the right rates in those states, and then we have to collect and remit based upon that matrix. Fortunately for you, to the extent that those transactions are happening in marketplace states, you don't have a reporting responsibility in those states. We do. So we take the complexity off your hands in terms of where things are taxed, how they're taxed, and then when and how they're remitted and reported on to those marketplace states. So once again, trying to look for a little bit of a silver lining in this whole thing. That's a complexity that we're building to take off of your hands. Building tools to take off of your hands.
Yeah.
Okay, so that's the matrix. What are the next steps? So, let us know if you see something that's off in our taxability matrix. We talked about Texas, and we're chasing that one down. At our symposium, somebody brought up Minnesota, and we actually did flip Minnesota on our matrix based upon the information that was provided. So if you see something on the matrix that doesn't look quite right, let me know about it. I provided my email address on here. Send me an email, but please send me an email with hard facts. Something in a state statute that's highlighted and shows exactly where you believe there's a position that differs, and or a ruling that a state has made either for you privately or a public ruling about race registrations, whatever, nonprofit exemptions that you think might be off, and we'll certainly chase it down. And if it turns out to be correct, we will make sure all of our advisors know, and that gets updated on our matrix. We're going to do a beta sales tax collection with select customers in early September, and those will likely be in states that where sales tax is already being collected by customers today. So there's not as big of a hurdle in in making sure that everything's correct, because those customers tend to be aware of their state's rules, and we can do it in a place where customers are already collecting sales tax today. We're going to provide this opportunity to register your nonprofit exempt status. So we talked a lot about that during the presentation, where you've got a race. That race is being held in a particular state. That state allows an exemption for nonprofits, and there's going to be a rule that you'll read and decide whether or not that exemption applies to you, your organization, or your race. And we're going to allow you to do that and give you the tools to be able to do that prior to us putting in place collection on a marketplace basis, so that we don't start to collect on exempt nonprofits in places where we don't have to. And then it's our plan to collect and remit in marketplace states by October 1st, and also to provide that broader ability for races to begin collecting and remitting on your own behalf in non-marketplace states, and to do that by October 1st as well. So that's the plan.
Cool. First, a little comment. In a minute, you're going to hear a train noise. That is not the sales tax collector coming to coming to us. We actually, our office is in an old 150-year-old mill building right by a railroad track, and a freight train goes by a couple times a day. And there it harks in the distance. I hear it coming. We've got a bunch of questions on here. I'm not going to ask them all of you, but I am going to ask some of them. And then I'm going to follow up afterwards, and we'll actually write these things up, put them in a blog post. We'll put like the question and then the answer. So it'll be, webinar Q&A session, and we'll go into more detail. So here's an interesting one. You've got a free event that charges a donation. So the donation might be at the discretion of the people that are coming, or it might be a fixed donation.
So donations don't have tax associated with them. And this one is one that we've really chased down hard because we were kind of surprised at the answer. But some states do charge a sales tax on the processing fee attached to the donation. And so, we believe that there's only about 10 states that have a processing fee, have a tax on processing fee. So potentially in those states where a donation is made with a processing fee in a state where it's taxable, there could be a sales tax on the processing fee alone, not on the donation.
Yeah. Another question, will the system just describe the tax rule or allow specific references to the laws or tax code when we implement?
It's actually, I'm going to take that as a good suggestion. So we will describe the way that the exemption works, and you can read it and decide whether or not you comply with that. Yeah, I think it's a good idea for us to see if we can also include the code section as well, in case you wanted to do more research.
Virtual races, how are they taxed?
That's a good question.
I think it would be on the place where the participant. So it's going to be
correct.
It's going to be based upon the participants thing.
That,
We've not coded that part of it yet, but
actually we did. I think Stephen and I had a conversation on that, and I also. But that's the general idea: is where is the service delivered? The service is delivered where the cardholder is. So taxed in the state of the cardholder.
There's a couple of suggestions in here, and like there's a suggestion from Wisconsin, and my suggestion would be that we'll of course look at it, but if you've got a hard ruling or statute or something like that that you can send us, that would be great. New Jersey has two types of clothes, taxable and non-taxable. Are we going to provide options for the taxability of specific merchandise?
We will, if the state has got specific rules for it. There's also quirky rules in places like Michigan where the first $100 of clothing is not taxed, but then after that is taxed. So the sales tax automation provider that we're working with understands those rules and knows those rules. One of the things that a race director will have to do is they'll have to pick amongst a set of ticks or tax codes when they set up their races on RunSignup. So if a race director doesn't code that correctly on RunSignup, the state rule might not work correctly. So if they just pick a general merchandise code in the state of New Jersey and they're actually selling a t-shirt, the sales tax automation provider and RunSignup is not going to catch that. You're going to have to code the right taxability code on RunSignup when you set up your store, and then the automation provider knows the rules of how the states work.
Is the tax collected on top of the entry fees, or can we bake it into the race registration?
So we asked that question of one of our advisors, and what they indicated is that most, but not all states have a requirement that sales tax be stated separately. And so right now we are not trying to code the exceptions to that. It could be something we could get to down the road if we find that it's a large issue, but we're not trying to code that exception right now. So generally, we're going to want sales tax to be stated separately.
Yeah. What about complimentary race entries or raffled off race entries?
So to the extent that something's free, there's no sales tax on it. It basically is just like you went into Amazon or eBay, and what's in your cart is the way it's going to be taxed. So if that cart has got 0 next to a line item, there's no tax, even if that cart item has value to it, there's not a tax to it if there's a 0 next to it in the cart.
Let's see. Say you've got finisher medals or t-shirts that are part of a race fee, and race fees aren't taxable in my state. What's the taxability on that?
So when you set up your race, you're always going to want to make the race the primary reason that someone is paying a registration fee. If the primary reason that they're paying a registration fee is to buy a metal, then it's going to be, it really should be, how is merchandise taxed in that state? But as long as those are incidental items that are given for free along with a race registration, then you just stick with the taxability of the race registration.
Cool. And to kind of take the inverse of that, so say race fees are taxable and something else like a shirt is not taxable, but they're bundled together, does it all get taxed together?
So yes, unfortunately. So if this concept of kind of incidental or immaterial to the sale can't apply because you're given a high value shirt and a low value race, or the two items are similarly valued, then typically you have to pick the worst tax treatment and put it on the entire bundle. And so bundling is not a good strategy to try to get a better tax benefit unless what you're bundling is just has incidental value to a registration, for instance.
Right, right. I'm actually in the process of writing a blog about refunds because we're actually working on that code right now, and we've made some decisions and architectural implementation that have begun. So let's talk a little bit about refunds.
Yeah, so refunds are complex, to say the least.
All that stuff is easy. Refunds are actually where the challenge is.
If sales tax wasn't hard enough, try applying it to refunds. So the reason that refunds can be complex is that we allow so much flexibility in our system for doing a refund. It's quite common that a refund is not a total refund. It's quite common that a refund is only a registration and not a processing fee. It's common that a refund is only a certain amount of dollars off of a registration. So because of that flexibility, we have to deal with the potential sales tax consequence of all that. So what we are writing into refunds is the idea that when a refund is done, that we typically will be, unless it's designated as a total refund, that typically we will be refunding items that have less tax before we refund items that have more tax, with the idea that that is conservative. And to the extent that we want to still offer flexibility, which we do, we want to make sure that for you, if you're doing your own tax returns, and for us, if we're doing tax returns on your behalf, that we're taking a conservative position if anyone were to ever come audit you or come audit us relative to that concept. So we're building that functionality today. The idea is that we want to be conservative with the way that we build that. If you're doing your own tax reporting, we'll give reports on when a refund has been done, and we'll show you on that report when we've refunded an exempt item and when we've refunded a taxable item. And we'll try to be able to build in as much flexibility as possible for you to tell us specifically what you're refunding, such that we can get the tax treatment correct on it.
Yeah. We are a for-profit company that puts on events for nonprofits. We collect the entry fees on their behalf as they don't want to deal with the accounting. Are the entries taxable or not?
Yeah, so you don't want to get yourself in the middle of that payment flow. And the reason is that who the money gets paid to is it's a concept of revenue, it's a concept of tax, it's a concept of sales tax as well. It's also a concept in our contract of ownership. We say in our contract, the party that we pay the money to owns the race. And so it does certainly muddy the waters if you step in between yourself and a nonprofit and want to try to take an exemption on behalf of that nonprofit. When we try to verify your exemption, we're going to see that you are a for-profit company, and we're not going to be able to complete our diligence that we're required to do that says that we're paying the money to a nonprofit company. So my suggestion would be, hey, you can still do all those services, just have the nonprofit get the payments from the race. And then that makes the tax treatment clean.
Yeah. Cool. I think we've covered enough of these questions. There's a number of questions that are kind of very similar, and there's some questions that are very narrow and specific. We probably will take all these questions and answer each one of them on that blog that I talked about. Some people were questioning what the blog address is. It's runsignup.com, or what is it?
RunSignup.blog.
RunSignup.blog. RunSignup.blog. Thank you, Allison. That's it. Thanks a lot for everybody coming. Thanks a lot for your patience. Thanks a lot for your help. And we will keep communicating and update everybody as best we can as we move through this process. Thanks very much.
Thank you.